All right. Good morning. Um, let's get to it. Like always, like, share, subscribe, of course. But a lot of these plays are going to be a good 10 of them are plays from last week as well. A lot of these plays are still waiting to perform, and a lot of these plays already took off. We have a few more that we're going to add to the list. But let's get to it. Our first one is going to be PDD. PDD 145 calls for March 21st. Next one is going to be Roadblocks. Roadblocks $75 calls for September 19th of next year. Next is going to be Hood. So the reason why there's two plays here is because, like I said, some of these are going to be plays that are add-ons for last week. So last week we called out 37 calls for December 20th. As you can see, the price is at $41. So these clearly already played out. If you would like to hop into these ones, you could, but I wouldn't suggest it. I would suggest getting the Hood $45 calls for February 21st. And obviously the price is at 140, I mean 45. So I mean 41, sorry. 41, and you're looking for $45 calls. So they're a little ways out the money, but they'll also be a lot cheaper than trying to buy the closer expiration. Next is going to be Xping. Xping $25 February 21st calls. Next is going to be Piton. Piton $10 calls for April 17th. Next, we have Bank of America $45 puts for February 21st. Next, we have Pinterest. Pinterest $38 calls for March 21st. Next, we have Zoom $100 calls for December 27th. Next, we have Ford $13 calls for June 20th. Next, we have Clean Strike $19 calls for December 13th. These are a little bit risky because we're coming into that week. So if you're going to play these ones, don't rush and play these on Monday. Rule of thumb is if it's sitting at about, we'll say 17, $18 on Thursday, try to swing them for dirt cheap Thursday into Friday. Sell them at around 9:45, 9:35. And that's when you'll make a good amount. You don't want these because of the theta decay to buy on Monday and then it just basically drags on and bleeds out. If it's something where it's sitting at about like I said 17, $18, take a nice little swing trade from Thursday into Friday on this play. But it is still in play. Next we have Roku. Roku, this one has already played out. This was a play that we gave out last week. This is already $10 over the strike. So I would say don't even waste your time if you're not going to want to spend over a couple of grand. Give me a second and I can tell you how much this play actually is already. And if it's worth even playing, you may just want to find a Roku trade, to be honest. So Roku is already sitting at. Hmm. It's already 300. Actually, no, it's not. Sorry. It is, yeah, this is already ran. This is $1,000 already. So when we called them out, they were only $52. So don't even waste your time with this play. And if you are going to waste your time with Roku, just try to get something that is expiring on the 20th and maybe go $85. Even 87 would be a good strike for Roku. Next, we have Hunt, which is $43 calls for January 17th. Next, we have Snap. Now we have two snaps because we've been calling out these $11 calls for 3 weeks now, and the asset is already sitting at 1244. So our new opening position is going to be Snap $15 calls for February 21st. Next is going to be Walmart. Walmart, we have called out two plays and they have played out nicely. This was our first play, which was Walmart, $86.67 calls for January. These I am, yes, still holding, but I am adding new positions for the 115 June 20th calls for next year. So both of these plays are still in play. I would not, like, just like Roku, I would not buy this $86 call. I would buy the 115 calls if you don't have the 86 already. If you have the 86 already, look forward to push to 115, closer to your, January expiration, and those should cook very well. But they're already up, I think, 400% already. Next is going to be CVS. We have CVS $50 puts for March. As you can see for the chart, it is already starting to head downward. So these are going to definitely play out within the next month or two. Next, we have Amazon. Just like before, we had called out a couple weeks ago these 212.50 calls for last Friday, which, as we can see, they played out. They did cook very nicely. We'll delete that one. And we will add these 230 calls for this Friday, the 13th. Like I said, same as I think it was Clean Strike. Look to play it on Thursday. If you're not already in it, you might be able to get a nice, pretty good swing on it for Thursday. And last but not least, we have Intel. Intel, we are looking at $25 calls for July 18th of next year. So we have a good amount of plays. We have a good amount of plays that we're already in. All of these plays have made money. So for the past month and a half, I've been spot on with all of these contracts. Some of them have been a little bit pricier and some of them haven't. I know for a fact the Walmart contract was only $40 or maybe $52 to be exact, and it's already up to $700. So allowing some of these contracts to just play out is going to be key. But if we're buying time, you can sit and chill. The whole point of this is not to have to trade every single day. You know what I mean? There's so many other things that you could be doing. So if you decide to buy longer contracts, now you can sit on them. Now, of course, if they're down 50, 60%, a couple weeks in, of course, cut them. Don't allow it, just because you think it's going to moon. Don't sit there and say, oh, I'm going to hold this. Either average in on them if you really, really believe in the chart, or just cut them and move on to the next trade. This is over 10 trades in this video that have been given. So you're able to basically find a affordable trade, So I would just say play safe, like always. We have a rocky upcoming week. We got a lot of data coming out. So, play safe. Buy things when they're down. When you're seeing that the asset is falling and you're looking for, calls, that's the best time to buy. And then if an asset is mooning, that's when you should be looking for your puts. So it's very simple. You're playing the opposite, but you're finding the best opportunities to buy it, which is going to allow the contract to be cheaper for the premium. You don't want to spend high premium on assets. You really want to buy them cheap. So think of it as buying things at a discount and then selling them at their max capacity. All right. So good luck this week, guys. Happy trading, and I will see you guys next week.